Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, I would like to show you something that I've never seen before. I'm talking here about what is happening on the option market for SPRT. I'm also going to talk about BBIG. We're going to go through the charts and through the synthetic short interest. Let's get into it. Yes, so let's start quickly with the chart. So SPRT, not an easy one. So basically we had here this huge cup and handle, then we had here the breakout. When this breakout occurred, I told you guys on my Discord that this would probably go much higher, which happened. Then let's go on a 4-hour time frame. We had this correction here, and I have to say that in our live trading portfolios, we took a trade here and we were playing basically this fifth wave. So let's see if this fifth wave is going to come. For now, I'm not sure. So 1, 2, 3, then you measure this, and usually fourth waves, they go to the, so 38.2, that this is what the book is saying, percentage retracement of wave 3. In reality, it's 50 or 61.8. So we tried to buy these levels, and we got stopped as usual, guys, by here a small fake out just below the support level. This is trading, it happens. So we are personally out of this trade. We took a small loss, which is totally fine. But I have to say that this looks bullish again, because now, so yes, this correction was a bit too deep to me, for first wave, but we are here in a very different situation from what is usually happening, because we have this, I'm going to show you guys this very soon, impressive synthetic short interest. The option market is just crazy. And here, technically, first we have this breakout. All right. So here, small fake out below 21.5. Then we trade above. We got yesterday the breakout on the 4-hour time frame above this trend line, and then we moved higher. So probably we're gonna have here one small opportunity today at the open to set up a trade. So I'm not sure we're gonna do something, but I have a cool idea that we can do using options. So let's have a look, guys, at the synthetic short interest. So SPRT. So as usual, guys, you know the spreadsheet. I'm retrieving all the open interest from the call options, only call options, as I know that retail is long calls. So I know that market makers have the opposite position, and this helps me to guess what the dynamics are going to be. So basically I'm checking if there is gamma or not, and if there are a lot of shorts. So here, first information, we have 60% of synthetic short interest. Okay. The market cap is smaller, $500 million US. The maximum synthetic short is 112%. All right. So this is the biggest I've ever seen, as far as I'm concerned. So let's see where this is coming from. It's coming from September, mostly. So you have here the 30 strike, that is huge. Basically everything is coming from September, and you have here this 85 strike that is absolutely massive and that is growing. So you can see it here, guys. So here we have this strike that is growing. So all of this is in September. So this momentum will keep only until September, unless those call options are rolled. Now, look at this, guys. Look at the volatility of September. We have a volatility of 400 something, all right, 520% of the 42 strike. I mean, so everybody's buying around the 40 area. You can see the volatility here is higher than is decreasing, all right? So the highest vol is between 40 and 50. So don't go for these strikes unless I'm going to show you how to take advantage of the situation. But buying this is just giving free money to market makers, because the volatility they use for pricing is, I've never seen something above that. I mean, at these levels, AMC, for example, was 200%, which was already insane. Here we are close to 500%. So let me show you how to take advantage of this. I posted this in the options alerts on my Discord, so you can have a look. I'm not sure we're going to put this strategy in our books because I'm afraid the spreads are going to be high. So basically, let me show you what I do here. So we start from scratch. We want to buy some calls, right? So let's go for a 40 strike call. We buy one. Then we see the volatility is 488%. Guys, I mean, 488%. Imagine this volatility was not at 488, but was at the realized volatility. All right, this is the 60-day. If I take the 10-day, is at 370. All right, so let's say the volatility is at 370. the price goes from 275, so $275 US for one call option. If I put this volatility as it should be fair, the price goes to 1.4. Okay, so you basically pay twice the price that it should be if you only buy this call option. So you can go for it, but just be aware that half of your money is used for market makers to protect themselves against a strong move up. So this is not a fair price to me. So what I would do here, I would still go for this 40 strike because it looks good, right? But I would cap the performance above 60. First thing. So I reduce the cost of my premium and I say volatility that is slightly lower but still extremely high. So now it costs me only $170 US and I'm gonna have the same performance until 60, which is fine for me. I mean, you know, if this goes to 60, it's still a nice performance. If you want to get the full upside, then of course you should not sell this higher strike call. And it's still expensive to me, $170 US for 175% strike with maturity 1 week roughly. I am here in September. It is too much. So I want to reduce that. So what we can do here is to sell a 50 put strike because you're gonna increase your position, your exposure. The delta, the total delta is now 35%. So basically, if you buy one option, it's the same as having 35 shares in terms of exposure at this spot. But of course, it's moving. And now we reduce the cost to 0 and we took advantage of this very high vol. So we get in a trade where the volatility is insane, but we actually don't buy this volatility. Here, our VIGA position is close to 0. As you can see, when the premium is close to 0, the volatility exposure is usually close to 0 too. So this is a nice trade to do. The only thing I am afraid of is I apply here a small spread. As you can see, I put 2%. So this is explaining why I have some difference here. Of course, it's more expensive if I buy and cheaper if I sell, because this is how it happens in real life. But I'm afraid I didn't account for the real spreads they're going to be in this market. So I'm going to check this at the open. And if the spreads are not too high, I think we're going to get into that trade. Because if it starts to move higher, market makers are going to be in big trouble here. Because once again, this is coming from September, guys. So that they cannot wait. They need to buy shares right away when it moves higher. And as you can see, most of the position is coming from September. All right. So, and we have the short-term breakout. So it looks like, you know, it's worth a try. Now let's have a look. So just to conclude, synthetic short is 60. We can go to 112. So what does it mean? It means that 50% of the float share would need to be bought if all the options are in the money. Of course, this is happening only with very high levels of spot. We need to go close to the 200 area. So we're not going to converge towards the total synthetic short, but it's a good indication of the gamma. Let's do the same thing for BBIG. BBIG, here you go. Same here. We got into this trade in our live trading portfolio. We got in here on the retracement. We bought at 660. We were placed at 550. We didn't get executed. It was a pain. Here we didn't take profits because it was looking like the fifth wave might go higher, but there was a selling pressure and we got stopped once again very nicely in this fake out. So, you know, this is trading. You know, I've been doing this long enough to know that this is part of the game, you know. So each time you're going to use a stop loss. Most of the time, the trade you're going to do when your stop loss is triggered is going to be a bad trade. But sometimes, maybe 1%, 5% of the times, it's going to just save your entire portfolio. So this is the only way to make safe trades. And here it's a bit sad. So we bought 660, we closed 720. So we closed with some profits, but definitely it was not the best trade we could do. So we have time, we're gonna do more. Just very quickly, an update on our live trading portfolio. We are not having for now positive results. We just started last week. August simulation portfolio, we were having very good results. Now it's been 1 week. For now, we have mitigated results, but this is a long-term game and we have time. We are very confident that our method would give us good results. If we wait a bit, we're going to keep applying the same method. And as usual, it should finish in positive territory. So we will keep doing this. So this was just a quick update on what we do on Discord. But here, what is the situation? So 1, 2, okay. this was not easy to know if this is a 1-2 or this is a 1-2. And if this is a 1-2 here, the small one, then I have a fifth wave to come. If not, then the 5 waves already happened, as you can see here, if this starts here, okay? So question, we don't know. And the fifth could be here. I mean, this is a new high. So the situation is for me difficult to analyze here. Maybe there is one more wave. For now, I see weakness. I see a bearish divergence, MACD going lower on the hourly time frame when the market is making new highs. This is a fake out that bulls actually failed to confirm as a real breakout. So this is not good. We have the divergence on the hourly time frame. We have it on the 4 hours time frame. So we have a double time frame divergence. We have potential 5 waves complete. So I'm not sure. I wouldn't get in here for sure because it's too high. The only positive thing, as I said in the recap I posted this morning in my Discord, is that here we consolidate just below the resistance level. So it looks like, the bears are not able to take ground. So it's, the only good news I see here. And I have a counting where potentially we have a fifth wave. So it's really like for me a pure gamble from here. I don't have really bullish signals. I don't have bearish signals. If we apply the usual Fib extension method, we come up with a target between 16 and 22. So somewhere here. Okay. So if we close above 11.30 on the daily, then probably this would happen. But once again, we will not get back into this trade. It's a winner with small gain. We go to the next one. And let's have a look, guys, on the synthetic short interest. So very interesting. For those who remember, I'm basically having all the synthetic short interest that I keep here each time I compute it. And BBIG, you can see we were at 66 total synthetic short in August. Then we went to 95. And today we are back to 67. Okay. So let me show you guys quickly. And I'm going to tell you what this means. But I can tell you already, this means that call options holders are unwinding their positions. They're taking profits. So this is diminishing. So this is not as bullish as what I see on SPRT, where it's growing. So it looks like people sell BBIG to go to SPRT. So maybe this is the right move. I don't know. And once again, where is it coming from? Same thing, mostly September. Here you check the big greens. So September, and you don't have that many upside calls here, You don't have open interest above 23. So that's why maybe people go to SPRT because they want very out of the money strikes. I don't know. But for this reason, there is less gamma as well. Only between 45 and 67. So 20% of gamma, roughly the same market cap, slightly bigger. So yeah, this is less interesting for me. But once again, there might be a fifth wave here too. So the only thing I wanted to add once again for those who really are invested into AMC, GME, and that are not happy that I make this kind of videos, I just want to tell you again, and I told you before, that I think that this is a virtuous cycle because right now AMC is looking good. Maybe it's not skyrocketing, but those gains, they are made, by whom? By the same investors that go into AMC. So if they make money here, if they squeeze some hedge funds on those smaller plays, this is money that can go to AMC and GME. So I think that this is all going together. This is the same fight. That's what I wanted to tell you guys, and I hope you enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.